Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the show today, South Africa's competition watchdog imposes conditions on Simba loan deal. British fund GemCorp extends $250 million loan to Zimbabwe. Plus, Uganda to renew operating license of local unit of MTN Group. We begin the show with the markets, and sentiment can be described as mixed in African markets. At intraday, the Nigerian stock index was slightly up 0.09%. Egypt gained 1.07%, but South Africa JSE index traded down 0.28%, and Kenya closed in the red 0.35% on Monday. And in the Middle East, Dubai still remains the only gainer at intraday. The index was up 0.51%. And looking at other markets, they were all down at intraday. In Europe, stocks opened lower after the Trump administration decided to impose 10% tariffs on $200 billion worth of Chinese imports. Also, the European Union's antitrust watchdog is probing automakers over emission systems. Let's bring in Daniel now to unpack all of these for us. Hello, Daniel. Good afternoon. Thank you for joining us again on the show.
Yeah, good afternoon, Chimmy. It's a pleasure to be with you, as always, here on Business Incorporated.
Sure. Now, the EU is investigating whether automakers BMW, Daimler, and Volkswagen colluded to limit the development and rollout of car emission control systems. Are these car makers in bigger trouble again?
Well, it seems to be the case that they're always in trouble, and that this dirty diesel scandal is never going to end. Yes, you mentioned the news that the European Commission said today that it had actually opened a formal investigation whether those car makers, BMW, Daimler, and the Volkswagen Group, so really the big ones here in the country, if they really had colluded to avoid competition in developing clean emission technology. If this would be the case, they would have denied customers the opportunity to buy less polluting cars, despite the technology being available, from those manufacturers. And yes, this is something that is being monitored here by the investors also on the trading floor. If this is really going to be the case, it would be another dark chapter of the entire Dieselgate scandal. When we take a look at the stocks of those companies, we don't really see big movements there in general. We'll be talking about that later in the show as well. The blue chip index DAX today has been relatively friendly today.
And then let's look at shares of one of the biggest e-commerce companies in Germany, and that's Zalando. And that share fell 17% early today after the retailer cut its 2018 guidance for the second time in 2 months. What is behind all of these, and why is the company having such a hard time?
Well, let me tell you something, Timmy. When you go here to a post office, you usually see two types of people going to the post office. They are either going there and picking up their Zalando package, or they are bringing it back. The strategy of the company has been for a long time, they want to grow as fast as possible. And yes, when you take a look actually at their sales numbers, those are very, very good. Zalando usually grows within a year by about 20%, and the company had for a long time this kind of slogan that the customers, whenever they receive a parcel from Zalando, that they actually start screaming. But today the shareholders are screaming because they are not happy and satisfied at all because of this warning that was issued once again. The problem that the company is having, that on the one hand their sales numbers are very, very high, but on the other hand their earnings, what they really get at the end of the year, that this is not very high at all. Their costs are going up, because one of the strategy that Zalando has been following is you can order something. For example, you order shoes and you're not sure if your shoe size is 40, 41, 42, whatever. So many people, they tend to order all 3 pair of shoes. Then those shoes get delivered for free to your home. Then they try those shoes on, and then the ones that are not fitting, they're sending them back. So the return numbers are extremely high. Many say that they are at a level of 60 and 70%. And of course, Zalando has very good deals with the German DHL, but still those numbers are extremely high. And that's one reason why Zalando is not coming back into the winning zone. The share price of the company fell today. It's actually listed in the MDAX. That's the second most important index here in Frankfurt. Fell by 20% today. So that's quite significant.
And away from corporate news, let's talk about the $200 billion tariffs. Have the markets shrugged off the initial reactions now?
Well, it's actually quite surprising when you take a look at the back. The blue chip index DAX today not performing actually as bad as you might think. The reason behind this, and also we have seen a similar reaction today happening in Asia. There, the Nikkei index was actually at a 7-month high. Investors were already prepared that we would see this scenario with this 200 billion worth of tariffs that were announced yesterday. If there is something what investors don't like, are unexpected surprises, and in this case it was very clear that this was going to happen. So now the response from China is going to be interesting. They have announced that they will respond most likely with the same amount of tariffs now for US-American products. We had a very interesting statement actually, and that's also probably one of the reasons why investors here have reacted rather calm about this tariffs issue today. The head of the German IFO Institute said that at the very end, Europe and also Germany could benefit from this ongoing trade conflict between the US and China, because China will maybe shift their focus to do more business from now on with Europe and rather less business with the United States. So even though this trade conflict is keeping investors here on my end and also on your end, of course, very busy, Europe and Germany at the end might even benefit a little bit.
All right, thank you very much, Daniel. Let's talk tomorrow. Enjoy the rest of the day.